Hello everybody, welcome back. The other night on my live show, The Cash Flow Kings, be there every Saturday at 8 p.m. Eastern, there's a topic of debate/discussion that me and my co-host had over SCHD and SCHG, and essentially why I own them, and I was actually getting grilled pretty hard. And nothing screams personal finance like a bunch of strangers over the internet commenting in the comment section that you're doing the wrong thing. But of course, any piece of criticism to any aspect in your life should be taken to heart, and you should do a deeper dive and maybe consider from a neutral perspective of why they're potentially criticizing you. So that's what I've been doing the last couple of days, and today I'm going to present to you my updated thoughts and my current plan when it comes to SCHD and SCHG in my current portfolio. And this video is not attacking anybody in specific or anybody particular. Alright, let's get on to the video though.
Hello? I like money.
Alright, so let's talk about the one that I've owned longer in the portfolio, which is SCHD. So I first bought SCHD back in 2022 during a bit of a bear market in around December. I have an average cost per share on SCHD at around $71 per share. Now, I'm only have 9% on that right now, not including the total return, which is a big part of it, because some people on Twitter can't comprehend that a dividend ETF has to have a total return that includes the dividends that are distributed. I wouldn't particularly call it a fair assessment if you were comparing a growth ETF compared to a dividend ETF's price return. That's pretty interesting. But I buy an asset for the long term. When I bought SHD, I expected to use the dividends in 10 to 15 years for vacations, cocaine, and other experiential based stuff. Just kind of play around money eventually in my late 20s, early 30s, or maybe even sooner if you guys smash the like button, subscribe. Obviously, I'm not expecting to outperform the S&P 500 with this, but what I am expecting is some solid capital appreciation on the side with it. I'm not expecting an 11% return every year, but I am expecting at least some solid returns. But it's come to my attention now suddenly from a lot of people, not to be named, that I'm 18 and I should be focusing on growth, which is 100% true, and that's what I've been doing recently. But when you buy an asset, you want to hold it and buy it for the long term. I believe that it would be irresponsible for me as an investor to sell out at a time like this, where especially it's very easy to nitpick performance, and at a time like this, especially with bull market and how tech is performing and how growth is performing, to say, hey, SHD is underperforming, it's probably not going to perform long term, so I'm going to sell out right now when it's probably not the best time to get out. And yes, obviously the temptations are there from other people. I hear it every week. You're 18, you should be investing in growth. Well, believe it or not, a big position of my portfolio and a lot of my core holdings are growth. Microsoft, Apple, Visa. And in a time like this, when only growth is going up right now, it's very easy to say you should be investing in growth. But I remember 3 years ago when a lot of people were hopping on the SCHD train when it was outperforming the market. Let's not forget that. But obviously the argument is completely legitimate that I'm 18, I shouldn't be focusing on dividends, yada yada yada. SHD is a defensive play. It gives me a little bit of F around money at the end of the day. It's going to grow my wealth at the end of the day as well. But obviously, you got to look at opportunity cost. What's the next best option? But why would I buy an asset for the long term? Nothing changes in my thesis whatsoever, except a bunch of sentiment from outside investors. Looking at the total return over the last 5 years, there's only about a 12% difference between SHD and the S&P 500. And that's even with the crazy run-up that Nvidia has had recently, completely carrying the S&P. Look, individually with Nvidia, there are some red flags for sure that they're reoccurring revenue or whatever, but eventually that bubble's going to have to pop at some point. Their performance is definitely not sustainable. And yes, I know people have been saying that, but their performance is just absolutely insane, where I don't see that being consistent at all. And eventually the stock is going to go down to where its fair price is at, and I think the market could have a big overreaction to that. That is when SHD is going to really flourish, I think, and you guys are going to have the SHD train come back again. Here's the performance between SHD and SHG over the last 5 years, because as we always see here on the channel, if a company goes up in the 5-year chart, it automatically makes it a good business, no matter looking at the underlying qualities of the company, or ETF in this case. But we can see, looking at the total return, which includes dividends, SHG has completely outperformed SHD. Now, there are a few reasons for this not to be named. Obviously, Nvidia is a giant reason because of this, but one could say that we're in a bubble. But we can look back, even look if you invested in 2020, what people would consider highs, we can see it really doesn't matter. If you consistently invest, you're going to get a really solid total return. So it's obvious that SHD could be a solid play for dividend income and a little bit of capital appreciation, but SHG will completely catapult your portfolio in terms of growth. Now, obviously, past returns are not indicative of future returns, and we have to assume that at some point SHG is going to come back down to land. Regardless, though, the qualities, the kind of companies that SHG invests in definitely align with my personal goals as well. Go watch my SHG stock analysis if you haven't already, where I go more in depth over some of the qualities and characteristics. With SHG, my plan with it is to kind of offset some of the capital appreciation loss that is had with SHD. I think that SHG has the potential to outperform the S&P 500 over the long term still, obviously considering total return. And let's not forget there's going to be market cycles. Right now in a bull market like this where all tech can go is up, SHD is not going to be as favored as much as SHG. And look, if I hadn't already built up my SHD position to where it's at right now, I would probably be buying a little more. But SHG is at a point in my portfolio where I need to be building it up a little more aggressively. We can see obviously there's data backing it up as well, that if you invest long-term in index funds, ETFs like this, that even if you buy at the top during market cycles, if you just buy and hold long-term, you're still going to get a market return. And that's why today I bought 3 shares of SHG at $101, which is way above my cost per share. I first bought at around $90, and that's crazy to say this, but my SHG position, which I've only held for a few months, already has higher capital appreciation from the SHD position that I've had for a couple of years now, which is absolutely wild to think. And it's very easy to get discouraged from a position like that, but I have to remain focused on the long term. Now, one could also make the argument, why don't you just buy VU? I don't like manually having to sell off my position. I like the fact of dividends that I don't have to manually trim out of the position. It is also passive income, and my goals with SHD have still remained the same since I bought it. And I still do believe the dividend snowball effect can work into play with SHD, especially with crazy dividend growth as you've seen in the most recent years. Now, one also could make the argument capital appreciation is going to be sacrificed with it. That's where SHG comes into play to kind of make up for that. Now, if I went 10% into SHD, 10% into SHG, I'd pretty much have the S&P 500 return. So I'm upping the percentage ticker that I want to have at SHG to 15%. Now, how am I going to do this? I'm going to dollar cost average. Likely every week, I'm going to attempt to at least buy 1 share of SHG, and then potentially, I'm not saying that NVIDIA is going to crash, but if it goes down, that's obviously going to have an impact on SHG's stock price, and I will be buying heavier during then. Right now, I only own about $600 worth of SHG and around $2,100 worth of SHD. So, in a $27,000 portfolio that I have right now, I'm going to be looking to build both of them up. But as for now, I'm buying more SHG. Both of these are going to make up 25% of the portfolio in ETFs, and I'm likely just going to buy VU in my Roth. Overall, I'm going to be using SHD and SHG as kind of a double play option in the portfolio. To recap, I want to use SHG to get some decent capital appreciation, but also let the dividend snowball effect go into work. I want to use the money in 10 to 15 years, maybe earlier if you guys smash the like button, as I said, to kind of use it for experiences, vacations, and other cool shit, to be completely honest with you guys. It would be so cool if I can go to Disney or Vegas or something and use my SHD dividend. Obviously, there's going to be a total return offset there, so what I'm going to do that to combat that is put 15% of the portfolio, an extra 5% compared to SHD into SHG. That's going to offset any total return sacrifice that I had to put up for it. Now, I hope you guys appreciate the transparency here. A lot of people don't want to share their honest thoughts and personal finance. This is personal finance, guys. You should not be listening to what other people think. It is what you want to do. I'm sure this will be discussed on the Cash Flow Kings live this Saturday. Be there. It's the High Tide Roundtable. Thank you guys for watching. Smash the like and subscribe. And do Dividend Stocks, Not Drugs. Have a good one.